All right, Evan, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon or come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it. So we had a down week this week on Wall Street, and the level that was on my focus, on my radar, really all week long, ever since Monday. You can see we had a pretty good dump on Monday, or actually I should say Tuesday, because it was a shortened week here, just a 4-day week. We had that pretty good dump, and I told my members, told my subscribers on the channel, look, watch this level here at 428. That level is this weekly breakout bar low. So that is the low. And you can see here we have this power bar, and then we have two inside candles. We call that an inside bar pattern. It's usually a pattern that wants to resolve to the upside. When you close below the low, especially on a weekly close, a weekly pattern, that's a failure. You can see, you're going to notice not only did we close below that, we closed below the 50 MA as well here. So that's a failed pattern. And if you know anything about my methodology, failed patterns are, in either direction. They're generally either a really strong sell signal, a failed bullish pattern, or a failed bearish pattern is generally going to be a very strong buy signal. Couple of case in points here would be back in December, we had this huge power bar off of the, Powell had a press conference. We closed below it a few days later. We got one more pop, and then that was all she wrote there for that rally. And then back in, December to January, we had this bear flag. And, as soon as this failed, as soon as we got that outside move there, we pretty much, had this one little pullback, and then it was off to the races here. So we had a big, powerful move after that failed pattern. So I am now on the lookout here for more downside. However, in the near term, and again, just to kind of reiterate here, the part of what makes this so powerful is that this was the FOMC pump, right? This was the, Powell's dovish, the Fed's going to pivot, that type of stuff. So now we're closing below that. So the market is saying, hey, wait a minute. And we've gotten a lot of inflation data the last couple of weeks. PCE came in on Friday, and that came in very hot. So now it's looking less and less like a Fed pivot is going to happen, which I think we kind of knew was kind of the case anyway, but the market does what it wants to do and it prices in what it wants to. But the significance of this specifically the weekly bar, is that, we wiped out that FOMC pump. So that is very significant. But anyways, short term, we are a little oversold here. We're about 250 points, 25 points if you follow the spiders, but 250 SPX points off of the February 1st high as of Friday's close. So a pretty good sell. We kind of, this sort of lag here was a little bit more controlled than the last, 6 or 7 trading sessions. It was kind of just straight down. We did basically kiss that 200 MA there on the SPX or spiders daily. And we went into this trend line here, which we're now, everybody's following here, as it's pretty, clear to see. You can see it very easily there, going back to the October low, the December, January low. And you can see we basically closed below that. We did close below it on Friday. But again, we're a little oversold, and we did come off the lows on Friday with good volume. So I'm thinking we can probably hold up here at least, for a few days, maybe to next week. We might get a little bit of a bounce. I wouldn't be surprised to see a back test of 400. But if this market, continues to kind of go sideways and put in a bear pattern, which I think is possible, if we can't reclaim that 20-day moving average, that would be kind of like your big, that would be a pretty big reflex bounce here off of this low. But if we can't reclaim these levels and we can't reclaim 400, another thing too, we closed the week below 400 as well. So a lot of quant funds, a lot of quant money has to flip short here. So again, we're seeing kind of, I think, a flow change in the market. But again, short term, a little oversold into this trend line. Usually the first break of a trend line, especially when it's only the third hit, you'll get kind of a fake out. But we'll see here, market's a little short term oversold, but that is a failure there on the weekly. So just be advised of that. I do think the highs are now in, and any rally here I think can be sold into. So just be aware, I think we are in sell the rip mode here. Let's take a look at the triple Qs. So the Q is actually doing a little bit less technical damage. They're hanging on here. NVIDIA having a lot to do with that. We'll talk about that in a few minutes here. But we did hold that 200 moving average just like the spiders. Nice little dump here, a little controlled dump. On the weekly, we did not lose that area though. So Qs are still holding up a little bit better here than the spiders, and we'll definitely respect that. In the meantime, however, you can see on the weekly time frame here, we gapped below the 50 moving average on Tuesday, and it was pretty much a gap and go to the downside. So pretty good rejection there. We're now back below the 50 MA. That does show some weakness here. I mean, if this was going to be a good bull pattern, you want to see it stay above. You know, nothing wrong with getting below the 50 week, but you want to see it close back above that by the end of the week. So a little bit of weakness here from the bulls. And again, these bear markets here, these bull patterns in bear markets, they generally tend to fail, especially when the bigger time frames are not confirming them. And all I've heard for really the last month is that, oh, we're bull flagging here. We're bull flagging here on the daily. But, you know, if you look at the, you know, monthly, which everybody should be doing, you got to look at those bigger time frames. You're going to see we just have a, you know, a monthly bear flag here. So again, those bigger time frames win out, and it's very important to take a look at those frequently. But for right now, the Qs are hanging in there. We'll give them a little bit of the benefit of the doubt for now. Again, I think we can bounce up here. Potentially, we're a little short-term oversold. We did hit the 200 moving average. You know, I believe if we can take a fib here, I think we hit a 382 if I'm not mistaken. Yeah, basically hit a 382 fib there. So that generally will give you a little bit of a lift. So we'll see if we can get some type of a bounce, dead cat bounce perhaps. Maybe we just go sideways. But again, we are still looking for the market to head lower here. Maybe not immediately, but it should get going within the next couple of weeks here. Russell 2000. Take a look here on the corner of my screen. This is the IWM here, intraday. And this blue line represents this green bar low. And look at what happened in the last 10 minutes. We got about a couple of pennies below it, and they just came in. The algos came in, market makers came in and saved that right in the last literally 10 minutes of the day here. So the Russell just barely lives to fight another day on the weekly time frame. But again, that daily, you know, we faded this whole move here. I told you guys I think the Russell's top is in. I said any kind of rally should be result in a lower high or a nominal high at best. And again, it's not a really good look here. We're still making lower lows. We're still inside of this red candle. If we bounce up, that 20-day moving average will be resistance there, as well as that red bar high there on the daily time frame. Again, this one could continue to go sideways as well. If it does that, it's probably setting up a bear base to go lower. As for the diamond here, the Dow, this broke down on Tuesday and didn't look back. So pretty good sell. Again, daily chart gap and go to the downside below the 50. We rallied up on Tuesday in the morning and then just pretty much straight down. Throughout the rest of the week, you see the weekly candle there closing right on the 50-week moving average, or just off of it there, but a nice little sell there, breaking through that trend line decisively, which, you know, has held up since December 22nd there. So that was the pivot low. And that is, you know, basically got tested here on Friday. But again, a pretty good definitive break there for the Dow. So again, market in a little bit of trouble here. I do think it's trying to hold on here. That's trying to hold up on its last legs right now. But again, we are looking for lower prices here moving forward. Anyways, over to the semis. So SMH, again, it did hang in there on Friday. It didn't take out the low from Wednesday. Again, that is 100% thanks to NVIDIA. So NVIDIA reported earnings, reported a 27% drop in revenue, but they mentioned AI, I want to say, I think it was 76 times in their earnings call. And the algos right now, if you just mention AI, the algos are just eating it up. So that's exactly what happened here. NVIDIA got pumped. I said on Thursday, when we had that, so NVIDIA reported Wednesday. This was Thursday's price action here. I said, you know, on Twitter, it looks to me like they're setting NVIDIA up here and gapping it up here, and they're kind of just distributing everything else. And we saw, obviously, follow through to the downside in the markets on Friday. So it did look kind of like a dog and pony show to me. Hey, kind of like, hey, look at everybody look at NVIDIA while we're kind of selling and distributing everything else. And we did get a nice down move on Friday, not so much in NVIDIA, but in everything else there. So that did kind of ring true here. I think NVIDIA is going to be kind of the last dog to go. That and perhaps Tesla. Tesla's still holding up really well. Can't see anything bad about the chart. These two have really held the triple Qs up. I mean, if you look at Apple, you know, close below this green bar low, close below the daily 200. Microsoft, I think this can be shorted on a bear pattern. I think this is topped out here. Google's, Google is in rough shape. Amazon is in rough shape here. But, you know, NVIDIA and Tesla are kind of holding up. Really, the triple Qs. Meta has come in pretty nicely since earnings. So Either way here, let's get back to the semis. Again, we did kind of fall back off that 250 level. Could this go back up there and fill this gap? It's certainly possible. Maybe 248. That was that previous pivot high. Possibly 250 again. I can't rule that out, but this is setting up for a move lower here. Again, if this one starts to chop sideways, then watch out. Below IGV on the weaker side, it did hold this green bar low on the weekly, right? But we lost the 50 MA and we closed below this pivot high. So again, that breakout has been given back. So we've given back all those gains that were made pre and post FOMC on cloud software. So not a good look there for tech. So again, you're kind of seeing some sectors start to slip more than others. And that's usually how it goes. It's not the whole market doesn't just, you don't get broad-based sell-offs all at once. A lot of the time in these bear markets, you'll get a rolling top. And I think that is something, I know that's something I talked about to my members and on my channel. I said we probably will get some type of a rolling top look, and that is kind of setting up here. So you got weakness in some sectors, some are holding up better than others, and it's usually they kind of go one by one until the last one falls over. Anyways, transports here via the DJT. Again, basically a 50 MA test here on the daily chart. But again, we closed below this green bar. We closed below this green bar. So showing a little bit of weakness. It still has a long way to go to wipe out that January 30th green bar. And you have the 50 MA and the 20 MA above that. So it's hanging in there for now. You close back below the 100 MA. So transport's kind of hanging in here. But again, just like everything else, if this goes sideways, which it's starting to do here, it's going to put in a bear pattern. But you do have a lot of support in this area. So we could expect a bounce, maybe some sideways action. I could see even a retest of 15,000, maybe even fill this gap here. But again, transport's selling off with everything else. We'll be watching this. These are a leading sector. We always want to pay attention to the transports. All right, over to interest rates. So we said that there was hot inflation data, and the 2-year definitely confirmed that. Here's the 2-year yield futures. I believe this is a fake print here, but it went all the way up to 4,966. And I'm going to show you here on Trading View. If we can get, here we go. So I don't have that print here on Trading View. So it's 4.841 is the high. Either way, you're basically into double top here. And again, what have I been saying here for months now? Watch the 2-year yield. It's basically calling bull, what on this whole rally in the stock market. The bond market is smarter. The bond market's ahead of time. Stocks take off. They're looking for a Fed pivot, We look at the 2-year bond futures, and we saw this breakdown here, and that has led to lower prices. Now we actually filled this rollover gap already on ZT. So the 2-year there, on the ZN here, same thing. We filled the rollover gap. ZN actually closed negative for the day, believe it or not, even with the futures gap there, and ZB filling the rollover gap here. So bonds still looking in pretty bad shape. We might get a little bit of a bounce here. I think that's probably likely at this point. They are a little short-term oversold. But again, you can see here on ZB 30-year, this is starting to look like an M and then possible A. So when you get that, an MA pattern, it's a pretty good reversal. You get a double top and then a bounce, lower high, and then it gets taken out. So that probably wants to go back down to double bottom here from what I can see. And also take a look at high yield debt here, HYG. That broke this lower trend line here on the weekly time frame, and it's back below all 4 major moving averages on the daily, below all 4 moving averages on the weekly. What kind of pattern is this? Down move, weekly bear flag, monthly bear flag. So high yield debt not in good shape either. That is not a good sign for general equities. All right, over to home builders here. So I don't know if you guys saw, I did have article up there on REITs. There is some talk about some of them having some dividend cuts coming up. I think Vornado and I want to say Douglas Emmett are 2 that I heard chatter about having some dividend cuts here. But XHB hanging in there. We had a nice pullback. It's holding the 66 level for now. But again, just like a lot of other things you're seeing here, that sell-off, consolidation sideways. If this continues, it's setting up a bear base there. You see the same thing on the ITB. It's holding the 50 MA for now. Could it get a bid here? It's possible, but I think it's going to result in a lower high. Same thing with VNQ. Again, what does this look like here? What chart did we just look at? HYG. Almost the same thing here. Down move, bearish consolidation on the weekly. and monthly time frames. So again, real estate will be in trouble in 2023. We've been talking about that quite a bit on this channel. And I think it's probably starting to see some cracks in the armor here. Again, a little oversold right now in the short term. But I do think this trend line breaks, and I do think you head back to the lows probably by the second quarter here. Anyways, over to fins. So we finally got that wedge breakdown in the XLF. We talked about this tightening range here, getting tighter and tighter. We broke down on Tuesday, and then again inside action here. So down move Tuesday, sideways action. We get more of this. This will set up for a move lower here on the XLF. So fins, one of the weaker sectors here. Broker dealers, XBD, fake breakout. We talked about this last week. I said, look, this is holding up really well. You basically got to all-time highs. I mean, almost got up there. But these rising wedge patterns, oftentimes you get a fake break to the upside, and then it comes back in. So XBD coming in there, you know, it's still holding up well. You held the 488 handle for now, but again, fins finally coming back to it, specifically the broker dealers. All right, over to energy here. So let's look at crude here. So crude, you know, lives to fight another day. If it loses this pivot, I think we're going to start to head lower here. I would, you know, a lot of people are looking at this head and shoulder pattern. It could play out here. I don't love it when it's at the low of the chart. I want a head and shoulder that's at the highs because I like it as a reversal pattern, not a continuation pattern. But either way, you do have that weekly bearish inside bar. So down move, and we're just inside of that. So this is setting up a bear base here. I do think crude wants to head lower here, possibly into, you know, maybe like the middle of the year again, into quarter two, maybe quarter three. And then I think we'll have a really good buying opportunity. But for right now, I'm not making any, you know, investments in it currently. It's holding up for now, so we'll just leave it at that. If it does break down, we're looking at 60, possibly 50. So those are going to be your targets there on the downside if this does play out. If this breaks above this 82.72 on a weekly close, the opposite will happen and it will go much higher. Remember, failed patterns work both ways. So just much like the spiders here, that inside pattern here should result in a move to the downside. And on crude, if this were to fail, we would expect a big move to the upside, probably right to 90 bucks pretty quickly. So anyways, over to XLE. So XLE under a little bit of pressure here. You held the 200 moving average on the daily and the 50 on the weekly, and we basically closed right at this lower range here of this tight channel. If this breaks, this trend line will be support. I would love it if we could get down there in a straight line. I would take that as a swing trade if we can get down there without any bounces. You also got some gaps in this area that probably want to get filled. So we'll be watching that. But for right now, it's hanging in there. It lives to fight another day. The one thing I will say is if we look at one of XLE's counterparts, XOP, what you have here is, let's get rid of this old trend line. I don't want to confuse everybody, but we're inside of this range here, right? So we're just kind of stuck here. Big red bar, bear flag, and then you have higher lows, right? And you have lower highs. But notice after this hit here, we made a higher high, right? So there's a high, a higher low, and then a higher high. Now we have a higher low with a lower high. So XOP might be losing a little bit of momentum. Notice how each time we hit this, we're kind of piercing and violating it a little bit more, right? You got a little bit less of a bounce. Look at the size of the bounce we got off of this move and off of this move versus this one. So we're seeing momentum start to decline here. So I think XOP starting to run out of gas, no pun intended. If this does break, you're looking at a move down to, well, 150 here to 130. Yeah, so probably a 20-point down move, which would take you right around to 110, and that would take you right to this pivot here. Also have some support in that area. You would have a speed bump at this green bar, the 100-week MA, but it does look like we're seeing a little bit of decline in momentum in the XOP. That could be telling us some clues here moving forward. OIH, so this one's been interesting here. It pierced the 20-week moving average, and we closed above 308.31. So again, a lot of these weekly inside bar patterns here, but right there, so 308.31, that was closed above, so they saved it here. As long as it stays above this has the upside bias to 350. If this breaks, you're probably going to go down to 280 pretty quickly. So OIH hanging on there by a thread. We'll be watching that very closely next week. All right, nat gas. A lot of messages about natty. I think nat gas has bottomed. So one of the things I've been showing you guys over the last couple of weeks. I know I've showed it on my channel a lot, and I'll show it to you guys one more time here. Seasonality. So typically we bottom right around in the 3rd to 4th week of February. Then I've been telling you guys it trades up into June, July. There's also, if you follow, so you guys know I'm a cycles trader, there is a 180-day cycle. It's a GAN cycle. It's very simple, but it's very effective. 823, just add 180 days, half a year. That takes you to February 19th. And that was, well, technically it would have been this Monday. I told my traders to look out for a bottom here in nat gas this week. We finally got an outside move. Take a look at the weekly candle. Big outside move down, and then a reversal here. Now you might say, well, what about the volume? Well, we had a contract rollover. If we look at the J contract, which is the new contract, you had massive capitulation volume here. And I mean massive. Take a look at the weekly. That's big time volume there. Also, we got 2 days left in the month. This can close green for the month here. So I think there is a bottom in nat gas. Based on cyclical patterns, based on capitulation, the volume there. And I mean, what an incredible move here. So it does look like, I mean, based on the fact that this was, to me, obvious liquidations, it stopped being about fundamentals, probably around the break of $5, maybe $4. But, you know, you're just seeing massive forced liquidations. This is highly unusual for any asset to fall this far without at least, you know, a 10% retrace. And now that rubber band is incredibly stretched. I'm expecting nat gas to get to 375, possibly even $4, in relatively quick fashion. And you might say, well, that's a huge, how can it go up that much? Well, first of all, it just went from 7 to 2 in what, like 10 weeks? And really, we just take a fib from the all-time high. A simple 25% retrace is $4. So nat gas really has a lot of upside here, and this will make new all-time highs in the next year or two. You can revisit this statement. You can timestamp it if you want. But either way, in the near term, I believe I'm seeing a bottom here based on technical factors and cyclical factors. But we'll be watching this. I'll be watching that monthly close as well to see if we can close green for the month here. But nat gas, big pop off the lows there. Anyways, over to... let's look at DBC really quick. So for ag here, again, I just want to talk about this. So we do have, it's kind of similar to the XOP chart. So we have this kind of flat bottom here, and we kind of have some like lower highs starting to develop. All right, so a little bit of a descending triangle. So DBC may be under a little bit of pressure here. Again, I mean, I told you guys a while ago, 22, I think would be a good area to buy. If this wants to get down there. Again, this is all just big pattern consolidation. Look how many years, I mean, 2011 to mid 2014, that's a lot of supply up there. So this is all just bullish consolidation on the bigger time frames. I don't think DBC is ready to break out yet. I think it will, maybe not this year, but again, just in the near to medium term, this may be due for some more backing and filling here, but I just wanted to point that out there for those ag names. CCJ here, I told you guys, I think 25.50 to 26. Didn't quite get there. Again, pretty good dump on Tuesday like everything else. Now going sideways. If it continues, it will get down to these pivots here. So around 25.50, 25.75. Those are going to be your short-term levels there. On CCJ for URNM, what I'm watching here now is this big wedge pattern, right? So we did close above this red bar high a few weeks ago, if you remember. So that did break out. Technically, it got back in there, but we could still put in a higher low. There's plenty of room for that, and this is getting tight, right? Like this is becoming a very tight pattern. So again, I think if you can get one more higher low, this could potentially take off. So we'll be watching that over the next couple of weeks. Maybe it even comes at us with a fake breakdown. It's possible. We've seen that before, obviously, but just something to keep an eye on there for those uranium plays. All right, over to the dollar via the DXY. Dollar power move this week. It's going up into this red bar. It's a little tired here. So probably around 105.63 is this red bar high. Maybe it gets there Monday, but I do think the dollar does need to do some basing, backing, and filling. Once that happens, it should work its way up to eventually in the next probably couple of weeks to months. I'm thinking 109. So that's kind of what I'm looking for there on the DXY. But a nice push up this week, and obviously that put pressure on equities, put pressure on gold as well. Gold's a little oversold here short term. You got a lot of support in this area here. I told you guys 1825 to 1830. We got down there. We had a little tail candle on Friday, and we couldn't hold it. So we did close below that this week. I still think it's a little oversold here. Probably should get a bounce at some point in the next week or so. So we'll be watching that. I will be picking up PMs lower. Same thing with silver. We're not ready to get in yet. Excuse me. We did close below that 200-day moving average. Again, this is also a little oversold. There's a better buy level a little bit lower. We're not quite ready to get in yet. But again, just one more time to hit that home. What kind of pattern is this? Up move, bullish consolidation. We close below this big green bar, and you can see how quickly we sell off. So that's why I pay so much attention to those patterns. Again, just to kind of reference it back to the spiders there. But anyways, platinum, nice little pop out of that falling wedge, and then a nice rollover. I will be getting into this lower as well. It still has more backing and filling to do. We're not quite ready yet. Copper. Told you guys 425, it couldn't get there, but nice little sell on copper. This should have a speed bump there at 390. Ultimately, I'm thinking about 375 is going to be very good support there for copper here. But yeah, nice little roll over there as well. And then lastly, Bitcoin. So again, this is one of the strong ones. We talked about Tesla and Nvidia kind of holding the market up. Bitcoin is still holding up as well. So, and you still have a few risk assets that are hanging in there okay. And if Bitcoin squeezes, again, this is kind of your target up here. This is your breakdown. That's where you broke down from. That never really got back tested. So I could see that getting hit here. If we get some type of a squeeze, you still have a bullish inside bar there, and it's hanging in there for now. So I can't rule it out. Again, we talked about a possible bounce in the equity markets here in the short term. Maybe that can, give Bitcoin a lift up to that area. Ultimately, these are all on borrowed time anyway, but for the short term, they can hold up for now. Ether, same thing. I am watching a possible rising wedge here. If this goes up into this upper trend line and it can't get above that, it's probably going to go back down to this one, and that is a bearish reversal pattern if we can't get through that. So just be aware. Anyways, lastly, back over to the spiders here. Again, little oversold short term. We are under the 200 moving average, but we are now expecting lower highs here. Again, those failed patterns on those weekly time frames, do not ignore them. Nice close below the 50 moving average on the weekly. Same thing on the triple Qs. Next week, we'll watch, and moving forward every week, watch this green bar low here on the triple Qs at 289.89. That will be very important for the market moving forward. Anyways, guys, getting wrapped up here. You guys take care. Come find Jason on Patreon. Come find me on carnivaltrades.com. Talk to you guys all next week.